All right, guys, and once again, I apologize for my lateness and the delay, but we'll get going somehow. Okay, so thank you very much for attending today's webinar. Today is the 2nd of July already, so we've passed the first half of the year, and we are on to the second half of the year, and it's Friday's Bretton's Fridays market wrap up. My name is Kenny Simon. And we have these webinars every Mondays, every Wednesdays, as well as Fridays. Okay, so Friday's webinar is it's a wrap up, and it's an extension of Wednesday's market review as well as what's pending and what do we actually do in order for us to prepare for the following week and how has it been for the whole week. And if you guys have got any questions, feel free to ask as well. So I'll get going without going into the market analysis first. I just want to go on to a few pairs, especially GBP pairs, because I want to share with you on a pair that I have been trading, and it's been floating as of yesterday as well, and mainly because of the how do you call that, fundamental side of it that has driven the GBP down. This is for GBP JPY. So I just want to explain a little bit on how I manage the risk, especially when we have got a sell. Let's say my sell was way down here. Now the price is way up there, right? So we have got different styles of trading, of course, all of us. But then sometimes, let's say we have got a stretched out SL or our stop loss, or let's say you don't have your stop loss, and then you have got the entry point really far away from the current price at this moment of time. Now, what can usually save you is the overall trend. Always the trend needs to be your friend. What that actually means is that it doesn't mean that you have to ride the trend all the time. It doesn't mean that your style has to actually be only following the trend. No, if you are a short-term short-term trader or scalper, you could easily be following the shortest term trend at the time, but that trend may be a correction for the longer term, right? But there's no right or wrong to actually deal with the market that way, depending on your style and your risk appetite as well. So this is how I've dealt with it. A lot of times I have actually shared with you on how you actually look at powerful mother candles, whether they are bearish or they're bullish. They are really, really powerful technique. And there's a lot of traders don't actually trade that way, following the mother candles. Mother candles have got its own strategies. Let's say some scalpers, they use mother candles for different reasons. But for me, it's just supply and demand. It's just buyer's power or bullish buyer's power or bearish seller's power. So that actually has got a lot of information in a single candle, and especially a single mother candle in a longer or a high time frame is really very, very crucial, very important, very efficient in knowing the direction as well. So let me just share with you on how I have actually identified only this area for GBP JPY, because it will sort of mirrored to all the GBP crosses as well, in a way, and all crosses, sorry, not on GBP crosses, on all pairs, the way that we analyze the market based on a single mother candle. Okay, so here, for example, in the daily chart, I've identified the buying type zone based on this single mother candle on the daily chart. When we go onto the weekly chart, that candle still persists, and that is a good sign. Okay, so then we go on to the monthly chart, then we see that really big single mother candle, bullish mother candle as well. So that confirms that that blue zone right there could actually be a very strong buying zone. Okay, so right now our price is at 153.53. Now, I have gone on to selling it at some point. Maybe I've entered it really early, but then how do I know that that decision is still going to be valid, that decision is still going to be good? Is when you look at where your buy zone and your sell zones are. Now, clearly, your buy zone is quite high, it's quite far away, right? It's quite far away from the current price. But let's say if you are already selling like me, now I'm floating, let's say, quite a lot. It's actually floated quite a bit. I just want to show you guys how to stick to your trade, whether it's a really huge loss as well. Let's say now this loss that I'm having right now, I've traded at 2 lots. Okay, so that's $20 per pip, right? And then now it is actually gone down so much. It's like high fever. It was high fever yesterday with 2,000 plus in terms of floating, right? But I kept to my cool and I kept to my to the trade and not actually close it, mainly because of various reasons. And I want to go through with you on the various reasons that you can actually when you are trapped as well, when you are trapped because of fundamentals, because of a lot of other things, whether or not to decide to keep that trade or not to keep that trade, to cancel it, to close it early at a loss, or to actually extend the stop loss and keep that trade. Okay, so here I'm keeping that trade. So it was 2,000 plus, went down to 1,000 plus here, and I'm still sticking to the idea that there is a potential for a fall of the GBP JPY. We'll take a look at the other GBP crosses as well, definitely, but I just want to show you what are the criteria to help you understand whether or not you should close that trade or you should leave it and extend your stop loss. Okay, so this is it. Now, number one is that you need to identify where the buy zone and where the sell zone is, right? So here, for example, very clearly, if we are on the daily chart, it's best to look at this on the daily chart, weekly or monthly. Now, the daily chart is quite clear as well. So I start off with the daily chart. Now, with the daily chart, it is quite clear that the buy zone is way up here because of this mother candle right here, correct? So that is good and well. Now, that mother candle itself is worth, let's say, the body itself to the body, opening, closing price, opening price, opening price, closing price is almost 200 pips. It's 196 pips, let's say, right? So that is quite significant. Now, we didn't actually bother about this one so much because that supersedes it. Okay, supersedes the whole thing. That's 200 plus pips right there. So that's quite good. So it's way up here, the buying zone. Now, the current price as of yesterday as well didn't manage to really go in here. It went up there and then it had this pin bar right here, and it didn't actually penetrate or pierce through. And it's sort of looking very clear that it's on a downward type movement right here, because you have got lower high, right? So you've got lower high. So these high, this is a high, this is a high, this is a high, and the step is going down. So that's a confirmation as well that the price is heading to the downside. Now here you've got the fourth lower high as well. So we've got 1, 2, 3, and then 4. Okay, the more the better, of course. But then this shows very clearly that it is trading to the downside, making that step lower and lower and lower, right? So what we need next is this. If we want to confirm more and more whether it's on the downside, you need lower lows as well. So now this is a low, but this is a low as well, but this is a higher low. All right, so we need price to come down a little bit more. Now, from looking to the left, we have seen that it has actually gone down quite a lot following this mother candle, but then we've got the next mother candle right here. So this is the reason why I think or I feel that it has got a lot of power. Number one is that you've got lower highs, your lower highs, but then the lower low hasn't formed so much, but then it is entering into an area that could potentially be governed by the bears. Okay, so here, this is your selling zone here based on the bearish mother candle right here. So this is the reason why I have decided as well. Number one, lower highs, okay? And then as the price go down, we see a lot of potential of prices following this because it's actually heading to the downside. And you've got pin bar candles right here, and this pin bar here has got a wick to the upside. So we've got many reasons to believe that I need to actually keep this trade open, even though yesterday, for example, a lot of traders would have actually been panicking if they have traded much more, and then they're, maybe thousands already in float. But then that has happened to me as well as of yesterday. But then I have got some conviction through some checklists like what I'm sharing with you guys right now to help you understand that no, you need to keep this trade open. Okay, so then what we need as of today especially is more fundamental data that's negative that would actually either drive the GBP to the downside or drive more JPY to the upside. Then we will get that price right now, right here, that would actually go lower and enter the sell zone. Once it enters the sell zone, now the sell zone here is at that opening price of that mother candle right here is at 152.29, right? Or 153.30, not 152, but 153.30. So very simple. I would let it fall a little bit more and make my selling price at 153.10, right? Because 153.30 goes down to 153.20. You cannot sell at 153.20. Under 20 is 10, psychological numbers, based on psychological numbers. So 153.10 would be an ideal selling price. Okay, so here I will then put 153.10. Okay, so this could actually be an added trade to actually cushion your losses as well. So would I take that trade as well? Yes, I would, because I'm actually already in a loss at the moment. But as it goes lower and lower, my loss will get less. So then I can add on another trade to actually cushion my loss further because it's already inside the selling zone. And that's how I balance up and then make my losing trade go back into more possibility of it being a winning trade, and then also adding a new fresh trade to actually add on the possibility and the probability to make money out of that trade. So this is how we turn around that losing trade, and we are all going to get trapped at some point. But that is why it is really essential for two things to happen. Number one is your very beginning, when you choose the pair. That is the most important thing, when you choose the pair. Okay, so when you choose the pair, that is number one. Number two, you have to plan your exit properly. So maybe some have already exited, which is still very good. If you have exited with a minimal loss, still very good, because you can then have this fresh pending order on a sell as well. So 153.10 right here, and I'll change this to, let's say, yellow. Okay, so 153.10 would actually be a fresh pending order that I would actually do, but only after the price have entered inside or into the selling zone. At the moment, it's still at 153.47 area, which is very close to 153.50. Psychological number. Okay, so that's what's happening right now. The good thing is that I'm seeing loads of wicks to the upside. So you got long wick here, long wick as well. This is a pin bar type pattern, candlestick pattern as well. So that gives me a lot more hints, a lot of checklists of why it's going to, it has higher probability of going down. Okay, so now we just need, we need this price, for example, to enter the selling zone. As it enters the selling zone and goes lower than this area, if it does, then you've got a very big fall expected for GBP JPY. But we don't care about that big fall at the moment. We care about the big fall within this selling zone, so that I can actually make money here at last once it actually crosses my previous sell as well, and also when it crosses my new pending order entry. So that is where I can see that it's in a high probability selling zone. Okay, so it is still bias wise in terms of GBP JPY is still to the downside. There is still, I think, lots of opportunities to see it going down much more than going up. So here, for example, we have got this huge candle here on a weekly chart that confirms that red selling zone, because you've got another really huge selling. So once the sell has gone under 15200 area, then I see it going down even more, and then it's got a lot of potential in various areas as well. Okay, so yeah, and we'll take a look at that later on, whether or not we can see. So if I go into the monthly chart, again, it confirms to me that I have got even a longer candle. So look at this. When we look at a mother candle, whether it's a bullish or bearish, right? We see it in a daily chart, and then it is this long. Let's say it's about, let's say 100, almost 200 pips, right? But then when we look at this one here, this candle here on the monthly chart is 800 plus pips, right? So then when we look at a single, for example, we look at a single mother candle, bearish mother candle on a daily chart, it is this long. And we go onto the weekly chart, it's longer than that previous candle in the daily chart. And then when we go into the monthly chart for GBP, JPY, it got even longer. So what does that actually mean? That means that that area is becoming wider and wider for sellers to go in, and all the power is gathered in that area. And that is what one of the reasons that these are the reasons that I have gathered to make me not close this order, even though it's actually cost me quite a lot of loss as well. But then you need to have a very strong reason or a list of reasons, especially on a price action perspective, also with fundamental. So in terms of fundamental, what has convinced me that I shouldn't close this trade as well is because GBP is thought to be much lower in terms of its policies, COVID situation, a lot of other things. And then the BOE governor, Bank of England's governor yesterday have actually mentioned about his sort of low in confidence in terms of inflation. So inflation's going up, is showing like GBP is going up, but then he has actually spoken a lot about how the public shouldn't get too excited, because there's just too many things as well that might come into play to pull the GBP down. So he has said that type of things yesterday, and hence the reason we see that GBP is just making that reversal now to go down. So that fuel could actually be what's bringing GBP down a lot more as well, especially GBP with USD, because if we expect the USD to go up even more now, today's NFP as well, so then we might see that GBP crosses might be good to actually trade, but we'll go and check that one out as well for today, whether or not GBP is nice to trade for today in terms of fundamental news data, as well as which other currency should it actually be paired up with that has very good volatility and trend clarity as well. Okay, all right, you guys are okay so far for GBP JPY? Because I thought I'll share this on what I am doing right now and my own float at this moment of time on BKFX account, so that it gives you an idea of how you should deal with your losing trade, okay, at the moment. Okay, good. So that's clear. We will still go on to other pairs as well. I think we can actually go on to Euro USD and various others that you guys have, and we can take a look at them. Okay, so since we are on the GBP JPY, let's go to GBP USD. So with GBP USD, it's quite clear as well. Now, this is on a daily chart. We've got loads of, it is in a little bit of an unclarity type area. Why? Because current price still trading in between all the three lines, right? And the three lines on the daily chart as well, it's not really going anywhere. It's not up, it's not down, it's just sideways, all this movement of these three lines, the three EMA lines. But then as you see the candlestick action, the action of candlesticks itself is just going down and down and down. So you've got a high right here. You've got some more little highs here. You've got highs, but all these highs are going lower and lower. So you've got lower highs, right? So lower highs is pulling down the price even more. And then we see that what is the dominant candle? Dominant candles are all bearish candles. See all the white candles, and then even right now it's trading at 3744. It's already trading under 3750 psychological number, right? And then it has fallen even more. Now, as it fallen more, now you need to look to the left a little bit. As far as the eyes can see, don't need to go too far back, but just in this area itself is very obvious, right? It's very obvious that you've got some support here to watch out for. So it could actually bounce up at any moment of time as well. All right. So we've got an A here, B here, C here, D, which shows maybe some potential of price going down a lot more. But let's now take a look at GBP USD from the perspective of price action using candles to the left, mother candles to the left, bearish candles to the left. So now, for example, follow the price at this moment, follow this very thin line price to the left, and then look at whether or not we have got some power of selling. We do have some power of selling following a mother candle, bearish mother candle, but not very long bearish mother candle. We've got it here. So there is a possibility of it going down here until the how you call that, the closing price of that mother candle, right? So I'll just color this as support, okay, where the support could actually be, because usually what happens is that, yes, we're looking at price falling, but we need to always ask ourselves, yes, it's falling, yes, it's got sort of a trend that is a downtrend, but where could it possibly reverse? You need to ask yourself that first, so that then you will get that gap of where it's safe for you to still enter to trade and get something out of it. If not, then it's going to be reversing, and then you will actually be surprised of the reversal. But you shouldn't be surprised of the reversal, because the reversals could actually be expected from looking to the left. So right now, there is a reversal expectation, of course, in this area right here, correct? As it falls down here. But then you've got something here as well. We have got this mother candle, not mother candle, but the bullish candle. So I will move this up here, okay? So these are all possibilities of where it could actually reverse. The first one was here, okay, right? Right, that was there where it could actually reverse, but I want to follow that mother candle, bearish mother candle area, right? So as it comes down, now here you've got support here as well, and that is also quite close to this mother candle finishing. So you need to have another line right here as well, and you see it is exactly there. And look at the price, 37.36. So 37.36, as it goes lower and lower, it would reach the 37.20 area. So what I would do is I'll just leave this one here. Leave this one here, go up just a little bit there. Okay, these are all the possibility area. Now, 37.38 or 37.39, right? Now here, this is where it could reverse on this blue line right here. So now price is really close at 1.3747 or so, right? Very close to 37.50 area. Now, here it could reverse here, it could go lower and start reversing at either one of these two lines, 3706 area or 3689 area, which is close to the 80 psychological number. So now we have got three lines here. Now, as a trader at the moment, it's going downwards, but look at all these three lines. It's just too close to tell us that, hey, the price might reverse at any one of these three lines, and your current price at this moment of time is just super close to this one here. And as it comes down, it will be very close to these ones here. Is it worth for you to enter a sell right now? No, not really, right? Because here it is on the downward move, but there is a possibility of a reversal. So then we want to confirm whether or not there might be a reversal potential. So then we go on to the stochastic right here, and we see whether or not we have got divergence, okay? So here, for example, it's quite clear divergence as well. You see here, this is the peak for that one there. This area here is a peak for this area right here. Now, if I draw from here to here, that is a downward slope, correct? Now, if I draw from around here to here, that's an upward slope. So it's very clear that there is a divergence waiting for us. That basically means that if you've got a divergence, a mismatch, this is a down slope, that's an up slope, that could potentially give us a clue or a hint that a reversal might come, a reversal might take place. But then when would actually be in these three lines. That is why we look to the left, and that is giving us the idea of by when. So this is by when in terms of price action. Okay, so there you go. This is basically it. Let's just see. Okay, now I would think that this line here where I have drawn based on this area right here, right? 37, 38 is also quite a strong support. Why? We've got a mother candle bounce up from this exactly this level. Yes, we have got candle finishing very close to this level. Okay, we've also got a support made by a bearish candle here. But the most important thing as well is that we have got a bullish candle that is quite strong. This is on a daily chart that's worth about, let's say from the blue line itself, is about 80 pips, let's say, right? 80 plus pips. And that has actually also gone up at this level. So I want to respect this level right here. So what is my decision? My decision is not to do anything yet. Do I want to go and hit a buy? No, not really, because we have got more dominant on the bears on the downside. Both fundamentals and technicals is telling us more on the buy on the sell side, not the buy side. But then it might reverse now. Do I want, as a trend trader myself and a pattern trader, I wouldn't actually enter the market following what it does. I will go into the market, entering the market following the trend. So the overall trend is still showing to the downside, as we have actually seen as well with GBP USD. As you can see, even though all these candles are on the upside, but the dominant has got all this bearish, very big candle here, right? So this big candle, bearish mother candle here, is at 300, almost 300 pips, worth almost 300 pips, is 297 pips, that mother candle right there. Now, price have gone low and low and low as well. We have got a big pin bar candle showing that this area right here and here is already stopping price from going up. So there's a lot of room to the downside. Go to the monthly chart, you can see a more confirmation of why it is bearish territory. Look at this bearish territory right here, right? So now if I were to use this right here and take that, go all the way there, still bearish selling territory. I would look into more sell rather than buy. And it's a good thing because you're looking at the sell, it has a limit at this area right here, right? So I will just put this here, and that limit is at 3300 area, psychological number as well. Yeah. And at close to that area, we have got that 50 EMA, exponential moving average as well. So then we have got confirmation that bearish candle also finished there, but then we want a closer take profit as well. You can use that mother candle right here because that's a support right there. So this is an area of take profit and exit as well earlier than this area here, which is at 34, let's say 3500. So 3510, no matter what you do, you have to exit, but it is still very far away from the price, 200, 300 over pips, right? On there, 200 plus maybe pips. So here we have got all this area to cover. So this is what's going on at the moment from a big picture perspective for GBP USD. Now it is on bearish zone, still bearish zone. Okay, it's coming downwards. If you go on to shorter time frame, like the 1 hour chart or the 4 hour chart, you can then zoom out and then find the clues there as well and look left. Okay, so that is why looking at the Big time frame doesn't mean that you are trading the big time frame. When you do trend analysis and market analysis, then you do trend analysis, it doesn't mean that you are deciding to be a long-term trader when you look at the daily chart, weekly chart, monthly chart. No, as you can see, you can look at the monthly chart, do your trend analysis and all that, go to lower time frame and plan so that the monthly chart, weekly chart, daily chart even are all your big picture map to see overall sort of movement. Okay, so here, for example, I'm looking at the 1 hour chart. With the 1 hour chart, when I look left, I don't have point of reference here, so I have to go more and more to the left. Yeah, so as I go to the left, to the left, to the left, I see that yes, we have got price now is at 3749 or 3750 psychological level. It needs to go down anyway to give us more room to sell, right? So it has to, if we want to start selling, we need to sell at 3740 onwards. Do we have the power? We're looking to the left, looking to the left. We have current price right now. We've got a bearish candle to travel through, but then it ends around this area right here, the support, the closing price of the bearish mother candle, as well as the opening price of the bullish mother candle is the same, and that is exactly at 3723, which is respecting the 3720 area. So where do you actually exit? You need to exit basically if you're actually selling already right now, or selling or thinking of selling. I'll take this one away. This is a bullish that we have, yeah, we have respected that area as a bullish as well. So it's 3738. Okay, so now price is at 3752, right? So if you want to sell, you need to sell at 3740 anyway. So let me just change this 3740, change this to yellow. Okay, parameters 3740. So let's say your entry price for GBP USD for sell, okay, is 3740. Now 3740 is your selling price right there. You need to watch out if you've got 3723 area right there as your potential bounce or potential exit, potential TP area, but we only have about 17 pips. This is why when we trade lower time frame, the pips gets lower and lower, smaller and smaller as well, right? So then it's best to exit at least at 3725, 5 or 10 pips, okay, above the psychological number of 3720. So ideally you want to exit at 3730, but 40 and 30 give you only 10 pips. So if you want to stretch that a little bit, then you want to take profit at 3725 instead of 3730. So that's your shortest term, smallest type profit taking that you can actually aim for on the downside for GBP USD, but you need the price at 3740 to trigger as your sell price first. Okay, that's for GBP USD. That's for short term. I just want to guide the traders on the short term first, and then you guys already know the big picture scenario based on daily chart as well. You can see that we are in the selling zone, so the bias is more on the selling side. I want to watch out for this area right here, of course. So the more it actually comes down, not do anything at this moment of time, mainly because if you want to start selling now and take that 10 pips, 15 pips, that's fine, no problem. But then 3740, I would think that if it goes lower than all this area right here, then I have got a bigger fall. I can then aim a very nice trade right here based on some very powerful mother candles that I can see right here as well. Then we've got some bullishness there. So then it needs to cross or under 36. I think that's 3680 and under, then I think it will give us a lot more potential to the downside, hundreds and hundreds of pips as it fall. But then we don't know the fuel yet, okay? So I let it fall first and let it fall and go under 3680 and below. Once it goes 3680 and below, and if it does do that with powerful candles, I think at the same time, almost you will get something fundamental that would appear to fuel that fall even more, because we do have a lot of selling power there, but it's limited to this area right here, but it's okay. You can actually sell right there. So I just want to also limit that area. Give me a second. I want to turn that into black zone trading area. Okay, so this would make better sense. And I just want to mark. Okay, that's at 3.5. Okay, so 3.530, whatever you do, you have to exit 3.530. But this is aiming at, I would set a pending order at 3.670 actually. That's for the long term and for later on, but that is where I see a high probability type trade, 3.670. So 3.670 and then exit at 3.530. Okay. For small traders or shorter term time period, you need to look at this zone, same zone, but then go on to trading it in stages, little by little, 30 pips, 30 pips as it goes down, and you tweak the numbers of entry and exit to psychological numbers, but look at other time frame, lower ones, 1 hour, 4 hour, 30 minutes, even doesn't matter. But then this is how you do it. You look at the bigger picture, you see that area, and then you go and measure it yourself in the lower time frame, and then you look to the left on that, look to the left for bearish mother candle power of the body of the mother candle on that time frame that you are looking at, which is smaller time frame, lower time frame. Okay, so here, for example, I see the potential of my pending order sell to give me about 130 plus pips, let's say. Okay, 130 pips or so. So I will just set that one and just leave it. It's got some areas that has indicated to me that it's worth for me to actually keep that pending order going on GBP USD, but I will keep on monitoring the fundamental side of it, because you need fuel. The fuel is fundamental. Okay, so that's basically it. Okay, any questions so far? Is GBP USD okay? Clear with GBP USD, clear with GBP JPY as well. All right, all good. Okay. All right, very good. Now let's also look at Euro USD again. Euro USD is still falling, still falling. It is in the selling zone. It is trading at 1.825. Okay, good. It is approaching, it needs to go lower than 1.820. Okay, so as it goes lower than 1.820, then you can actually sell at 1.1810. But let's see whether or not we have space, for making money, take profit. Location, location, location is everything as well. Here in this location of your your potential trade in within the sell zone or in within the buy zone. So it's exactly like property. In within that area, you need to go and find an area first. In within that big area, then you find a smaller area that you want to build your house or buy that house of yours, right? So it's exactly the same here. In within that bigger area, you want to find your plot of land, your plot of your property. Okay, so 1.810 would probably be ideal. It's not too bad. It's up here, and then 1760 can still be your target. So if you entered 1.1810 right there, okay, and all the way down here, that gives you at least about 50 pips or so. Okay, so I just need to measure that. It's going really strong even on the daily chart. Then we have got mother candle coming all the way down, all the way down. Not too bad. It's good area to see that from that area here. So 1.810 would probably be that yellow line right there is your entry price, potentially 1.1810. So 1.1810 you sell. Let me just measure that again, just to make sure. Yes, it's about 50 pips. And you are supported by all these mother candles right here. So you got three mother candles, body of mother candles that says to you that there is a potential, there are some buying powers in this area here of the 50 pips. Okay. So that is another selling trade signal, because I am going to trade this as well at Euro USD 1.1810 you sell, 1.1760 you exit, or your TPS. Okay, and you want to always plan stop losses. So that's so you need to plan your stop loss at about 100 plus, at least about 100 pips or so. Okay, all right, there you go. This is for Euro USD. Now we've checked on Euro USD, we've checked on GBP USD, checked on GBP JPY. Okay, Australian dollar basically may experience a very big fall, and that's basically it, because we have got news about lockdown, terrible lockdown in Australia. They only have a 6% rate of vaccination, which is really bad, very low for a quite developed type country within the Antipodean Asian sort of zone, right there. And it's disappointing, but then for us as traders, we can see that that could actually be a sort of a marathon long-term type downtrend for the Aussie in terms of its economy as well as its currency, the AUD, or the Aussie, the Australian dollar. Okay, so we see that everything is on lockdown. It's quite terrible as well, because that will impact starting from next week the whole buying and selling of minerals and manufacturing minerals and all that to China as well, and their biggest partner there. So a lot of places will actually close, a lot of shipment will actually pause. So it's surrounded by the sea as well. It's it's got their maritime sort of trade activity really very high going through Singapore and all that as well. So everything will actually sort of shut down, lock down. So that could then give us a lot of idea that the Australian dollar is good to actually sell. The trend would actually be stronger and stronger to the downside. That would also give us opportunities for New Zealand dollar for the sell as well. As you know, it will follow through. New Zealand dollar usually follows through like the little sister or little brother of the Aussie dollar. So that's basically what I think would have in mind. Now, as in a glance, if we look at GBP JPY now, of course, my selling price is down here, the current price up there. But then sometimes when we've got reasons, and then we just have to keep our trade open. And then, but you need to have valid, solid reasons for it, not guessing kind of reasons. You have price action reasons, list of reasons on price action, looking left, all the kind of stuff that we do. And then you need to marry that up with the current happening in the fundamental side of it, in terms of that country in Great Britain. What has actually happened yesterday with the Bank of England, that would actually fuel it a little bit more. Could we actually see more fuel of bad news for the GBP and then more positivity for the JPY? Or maybe the JPY is also weak and also negative, but then we've got more fuel, negative fuel on the GBP side of it, building up, building up, building up. So if that does actually happen, then GBP will be much, much weaker than JPY, even though JPY is weak already, has got its negative impact, but then it is all a measure of what impacts it consistently and also consecutively. If we've got yesterday negative news and then today we've got more and then more, and it all keeps building up for that one currency, then we know that it's a marathon of downtrend or uptrend, depending on what kind of news and what kind of data is impacting the country's economy and various other things. Okay. All right. Any questions, guys, so far? How is it going? Yes, good one. Thiruvan, let's take a look at gold, okay? So gold, as I've mentioned, it did a bit of a pennant triangle. It's called a pennant. It's like the triangle pattern. It has actually signaled more downward move. So with gold as well, from the news fundamentals, it is actually responding to what's going on in the States. Now, as we know, in the States, it's going up. Things are still looking rosy, but it's the dynamics of the country as well as various other things that pushes the dollar up. Not necessarily very good economy, very good this and very good that, but of course we had the vaccination from a new company yesterday as well that boost up the dollar and various other things. So things are, the fuel for the US dollar is coming back as well. So that is basically going to pull down the gold's price. But then when we look at the fundamentals of the strength of the dollar pulling down gold's prices, then we look into the chart, and coincidentally, we also have a pennant triangle pattern. We also have, price action list as well telling us. So we've got a good marriage between fundamental and technical to tell us that the USD is building up in its momentum to the upside. So that would actually pull down gold even more. Okay, so let's take a look. Now here, I'm going to start fresh with the goal again with regards to all these drawings and tools that I've put onto the chart. So we will start this way. Okay, so I'll just go straight onto the monthly chart. Now, when I go into the monthly chart, this is always a misconception amongst traders that when I go into the monthly chart, they say, okay, Kenny is trading monthly chart. He's leaving his trade open for months and months and years. No, I don't do that. I actually do a lot of my trades, most of my trades, I would say almost 90% of my trades are all pending order. Now, out of that 90% pending order trades only, and I like it to be auto. So, that's my idea of trading with peace of mind is when I have everything on pending order. And I actually watch the market, read and analyze the market actually for the traders. Because I do my analysis for my own with my plan of all the trades, which I share with you guys as well, usually a day, a week, a month before, and depending on how long I want that trade to open. But majority of the trades, I don't have it opening for months and all that. A week is the most, maybe like 5 days or so would be the most, but then I prefer it to be in within the 1 to 3 days range for it to keep. But I really like intraday trades as well. So a lot of my trades, even though pending order, they're all intradays as well because they're 30 pips, 50 pips as well. And then I've got some, I balance it up with 100 pips, 200 pips, which I have to wait for about a week or so, that kind of thing. So I know roughly how much pips with how long I need to wait, but then I don't monitor them. I only monitor them at the end of the month and I just leave it, as it is. So if we look at the big picture right now for gold, and we can see that it's around this area right here. What can you actually notice in this area? This area meaning it's trading at 1775.80 area. Okay. What I can notice on the monthly chart is very simple. We look at all these past candles here as your reference point. Okay. So it's simple because we have got a mother candle, bullish mother candle there. We've got another mother candle right there. Okay. So we've got a bullish mother candle there as well. So you've got three bullish mother candle, and I would say that the dominance is actually the bullish mother candle because we've got three, but we've got one that is the longest one right there. Okay, of course we've got more candles, mother candles for the bearishness, but look at the basics of it. The basics of it is that you've got a high right there. You've got some more high, and you've got a high here, which is almost the same level, but the high has gone lower. You've got lower high to some extent, not many, but then it is moving lower in terms of the high. Now, the base right here of a support and then support and then support has also moved to the downside, right? But overall in the monthly chart, the whole candle right here is still above all the three lines, which basically give us the hint that it is still to the upside type bias for the long term, let's say. Okay, but then here we want to look at where would actually be the buy zone. Of course, you want to follow that very big candle all the way through, right? Will be your buy zone. But I would look at this middle candle right here. Now, this middle candle, middle mother candle, bullish mother candle, I will yes, we'll just that's the yellow, that opened up at the price of 1791.73, right? So then if I were to look at where it actually ended, I wouldn't go up here on the bullish candle itself, but I will go here. Look at where this was a opening price of a bearish mother candle. Then I will take this one here, which is a bit lower. Okay, so I will look at this zone right now as a buy zone. All right, so the buy zone hasn't really started. The buying zone hasn't really started because it is just there at 1791.73. Not now. Now, basically, it still has got the capability of reversing, coming down a little bit more. Why? Because of USD strength. So if I were to expect that gold would actually go down a lot more, then I would think that it could potentially go down to the end of this this opening price of this bearish mother candle right here. Okay, so I see that there is some space for gold to drop to the 1734.61 area. So what I'll do is I will change the color right here to blue. Okay, so then this is where I would think it would actually be ideal support to find support for gold. So that basically means the direction is still to the downside, okay, for gold. But then they take profit. If you're wanting to sell and you are selling it, let's say, make sure you exit above 1734, let's say 1735 or so, okay? But when I do that line right here, at the opening price of this mother candle, then I find that it's opening price of this mother candle right here too, coincidentally, which is a very good sign. So this is what I see happening. I see it coming downwards more so that more of the traders and investors can actually buy it cheaply, or cheaper, not cheaply, but cheaper, at the 1734 area and above. So it would most probably drop a little bit more and then find support at this area before it decides to actually go up much more. If it does come down a lot more, then it needs to visit this support area and come down lower. Then we have to plan and see whether or not we've got a lot of more selling opportunity for the gold. But at this moment of time, yes, it would drop a little bit more in my opinion. But then as it goes up and pierces through 1791, or let's say 1792 onwards, then you can start buying right there. And then you want to exit before 1810, which is 1860. It would be an ideal price to exit. So once again, 1792 could actually be a sell or the buy for gold. And this might actually happen a little bit later though, but if you are thinking of that price, to lock in that price and just to keep it there, if it doesn't reach it at all and let's say price goes down really far, you can just close that pending order. It's harmless to you. Okay, so 1792 to buy and 1860 to actually exit. Okay, so I'll just put that area right there as a buy zone. Change the color to a buy type color. Okay, bullishness. So that one there, that's your buy zone. Price hasn't gone there yet. Okay, there you go. Now this is the big picture trend analysis, looking at mother candle, looking at price action and various other things. Now, when you are trading on the shorter term, you need to go and visit your shorter term time frame and you plan accordingly to that. That basically means you look to the left on the time frame that you want to trade and you plan that. Okay, so now it is not a buy type entry, only buy entry is here. Okay, not around here. So here would actually be on the sell side, right? So the sell side, I have also given the support around here. So when you are looking at the 4-hour chart, 1-hour chart, let's say 1-hour chart, okay, and you need to go to the left, right? So you go to the left and you see that whether or not you have got momentum mother candles. You've got mother candles here, very long one here, but not yet around here. Here, yes, you have some, but it's finishing here. Some are finishing here, finishing here as well. Okay, and all finishing around the same area, which is basically signaling to me some potential support area. Okay, so I will push this one up a little bit, and I want to see that 1774 or 1775, let's say, would actually be an ideal area to exit. It's also given us a bit of hint here, it's got stuck around here. So whether it will come down a lot more, not really, I would think on the 1 hour chart, but let's see what happens because it's already beginning to reverse in this area right here. If it were to go lower and you want to participate in a sell order based on a 1 hour chart, then you want to focus on this area right here on the sell side of it on the 1 hour chart. Okay, so this is your sell zone right here. Okay, based on that mother candle there. So I'll change this zone color right there to red. Got red right there, and this is your zone of the sell. Okay, so do you buy right now? Yes, you can if you want to, but it's not in the buy zone, it's not in the sell zone, so the risk is yours. Okay, this is what it means. So if it is in the buy zone, your probability is higher to make money and profit and not get trapped. If you are in this area right here, you are better off selling because you're in a selling type zone. Now you are here, whatever you do, look at the bearish candle to your left and plan accordingly. Use your indicator, use your EAs, whatever you want, but then the risk is yours in this area. Okay, the risk is still yours in all these two areas as well, but then the probability is a little bit higher. Okay, so here basically we have the price. Okay, 1770, 1754. I'll change this to red just to give you an idea that that is your resistance area or sell entry area, or entry into the selling zone at 1770, and then you need to exit before 1754. Okay, because that's the support area right there. This is based on the 1 hour chart on this mother candle that is really obvious that we can actually see. So if we go on to 4 hour daily, that red zone can be confirmed as well. You have got bearishness here based on the mother candle as well. Okay, all right. Is that clear enough? Is that good for the goal side of it? Goal planning, you guys are okay? Okay, all right. Any other questions, guys, before we end the session? Any questions at all? You guys okay? Okay, perfect. All right. Alfred, all good? Any other questions? Okay, brilliant. So here on USD CHF, I just want to show you guys, we've drawn a bullish ABCD. I was expecting all this movement as well. And this is an analysis as well for your information that I've done based on the mother candles as well, looking at the monthly chart, the weekly chart, but then looking at it, it's already started even on shorter term to actually respond to the movements. You see how it actually moves a lot right there. So here on USDC, excuse me, USD CHF, it's looking quite strong to the upside. And that's on the 1 hour chart. And then it gets stronger on the 4 hour chart as well. As you can see, the three lines are moving not too bad at all to the upside. We've got a little bit of uncertainty there on the daily chart, but it's still above all the three lines, but it's moving to the upside. Now, with the weekly chart as well, I can see there's some power of it moving upwards. And if I go into the 4 hour chart, I look into the average directional movement index to measure the strength of the USD versus the CHF. You can see that that blue line right there is way above the 25, meaning that there is definitely strength of the USD versus the CHF. It's the same as well, going up really nice and steady on the daily chart as well. And then weekly chart, okay, that's way off later on, so it doesn't matter. We can look at the 1 hour, the 4 hour, and the daily first for now. Okay, but it is signaling a lot of room to the upside. So this is important for us. Let me make it a little bit more interesting to color this area here so we can actually see the candles a little bit clearer as well inside the triangle. Okay, and here we'll do the same for the second triangle right there. That's why we call it geometric trading, because this is a geometric triangle shape that's, that had formed this pattern, geometric bullish ABCD pattern with two triangles. So there you go. All right, so on that side of it, also as it goes upwards on the daily chart, there is a little bit of a threat of a significant resistant area to the left, which is this area right here. So I think we may have some room to the upside, perhaps another 15 to 20, 25 pips more max before it wants to start to actually come downwards. So let's also look at the stochastic on the daily chart right here for USD CHF. Yeah, you can see that you have got a divergence as well. This one, this slope is downwards, this slope is upwards as well. So that's USD CHF signaling some potential reversal at this moment of time. So if you are buying USD CHF, you just exit right now. Okay, that's probably the best thing to do. Okay, there you go. So there you go, guys. USD CHF. Oil, a little bit on oil, as you guys can see, we have expected the rise, right? So with OPEC, now the OPEC Plus meeting has been delayed, so it has been postponed, pushed a little bit forward. So today is where the Middle Eastern world, and we'll have some talks to all the other relevant parties or countries as well. It has actually gone up for various reasons as well. So it's mainly the demand side of it. It's also COVID variant, Delta variant as well has popped up. And the one in Australia, basically, they're also oil importers, by the way. Okay, oil importers in Australia. So the variant, Delta variant, is what is thought to actually come through as a new wave in Australia. So the lockdown is quite drastic in Australia at this moment of time. Okay, so there you go. Oil, we're expecting, yes, it is actually probably correcting a little bit, but then it might find support again at the 74.20 area. Now it's at 74.55, right? So oil, we can use the psychological numbers as well. So it might find the support earlier at 74.50, or if it goes lower more, then might find support again at the 74.20 area as well. Okay, so there you go. That's for oil. I think the UK oil would probably be trading almost the same. Now with the UK oil, we have had 74.10 to buy, 75.40 to take profit. So I think it's already hit the TP1. TP2 is only at 77.40, so it's a little bit far off. So I think it is also signaling bullishness for the UK oil. We look at the weekly chart. It's got some momentum, but it needs to actually go further up first, just a little bit more, especially 75.60 and above. Then it would give us a little bit more hint to actually go up a lot more. Okay, but we've got good big gaps expectation for UK oil as well. It's already hit your TP1 at 75.40. So then we are looking at TP2 77.40, really far away, and then 79. That is a little bit later. Let's trade also on the short term. Do the same as what you would do on the currencies, where you go onto the lower time frame and look to the left as well. Okay, so there you go. this point of reference around this area, I would think. This is for UK oil. Okay, so you just need to go on to the left a lot more and see, look for your bullish patterns. There you go. You put some bullish pattern right there. Bullish mother candle, sorry. And that would actually give us a little bit of a rise upwards to short-term areas 76.34. I would think 76.10. So if you are buying, thinking of buying again your oil, your UK oil, you can buy at 75.60. Then your exit would actually be at 76.10. Okay, let's just for short term and see what goes on, because it still is fundamentally driven, geopolitical driven to the upside more than downside at this moment of time. Okay. All right, guys. I think that's basically it. We've got some pairs there for you guys to work on and also to trade. We'll discuss US 30 at some point. It's just been stuck there at this moment of time. We also see USD CAD very nicely respected that black zone I've drawn in between the blue zones, as well as it pierces through upwards and go up into the blue zone here. Then you've got more upward movement as it pierces through 2720 and above. Then we might see a bit of a push to the upside, like a rocket on the upside, but not yet. It's still early, okay, for USD CAD. All right, guys, I think that's it. That's all I have for you guys for today. You notice we didn't really go a lot into the fundamental side of it because it's actually been sort of carried through, carried through type thing. And also it is freshly expected on the fundamental side for NFP for today as well. So it's the beginning of the month, and yeah, that's basically it. The first Friday of the month has NFP in it, and we are looking at Delta variant, big news as well in Australia. Some key things, and then inflation is still going up and up and up in the US, and that would actually be pulling the gold's price down. So that's basically it. We still can work on all this fuel that has actually been happening for the last couple of days, couple of weeks ago as well, and then together with commodities, oil, UK oil, US oil especially, WTI would actually be sort of clearer in terms of its direction after today's OPEC Plus meeting as well. Okay. All right, guys. With that, I want to make an exit myself into this from this session, and basically I want to thank you guys for joining me today in this market wrap up, Friday's market wrap up, and wishing you guys happy pipping, but most importantly a great weekend, and for you to rest your mind and soul and yourself, and then we'll see you guys again on Monday. Okay, guys. All right. Take care. Thank you very much, and have a great weekend, and speak soon. Bye-bye. Take care. See you, Tiravan. Take care. Bye-bye. You too. Have a blessed one. Have a blessed one all. Take care. Bye.